Okay, so I'm going to run a few more games and then cover the triple Qs over here and just kind of go a little bit deeper into um, dark pool volume and gamma and some other things. So start off with this. Um, this looks constructive. Um, Ideally, I would want to take an entry down here, but the game starts me off at the prior swing high. So I mean that's okay, I guess, because you can see where this is not really a range. Like price is in somewhat of a range here, but overall, this is a trend versus a sideways chop where it's just going sideways. So this is where the hidden bull divergence strategy works more often than not. So we look at this particular accumulation phase, and another trick that I kind of use, or not really a trick, but a way to measure some of these moves is just by like using, see these rectangles here? A lot of charts have these. It makes it a little bit easier to measure it. So, like I was trying to explain in the last video towards the end, when you get a range like this, you're kind of like, the way that I do it is you want to take the high and the low of each like little range in this structure and add it to the high. So here, especially because down here we have a deep hidden bull divergence, right? And it swept a prior demand zone, both important factors to improve the probability of it, being successful and actually hitting a measured move. So we'll just take 47, the high 47.84, the low 43.32. So we'll just call that 450 plus this little thing here, 45.75. So it's about 6 off the high roughly, and that would be 53, and it actually exceeded the measured move. Now when it's exceeding the measured move, that's a sign of a lot of strength. So when it builds its next accumulation phase, it increases the odds that much more that it's going to hit its measured move. So now once again we have a hidden bull divergence. We're in an uptrend, so we'll take the low here. It's at 49.36 with this 43.52. We're going to round it off to 6 and add it to the high. So roughly 61. Price is already at 54, so I mean that's still like another 10% if it's correct. And if we just measure this range here with this little thing, talking 55 at the high, 49.25, so 6 and some change. So something like, I'm looking for a price target of like 6, in between 60 and 65-ish. And here's the nuance with timing that I actually came up with a while ago. It has mixed results, but this is just a way to gauge for like options, because if you're just trading shares, you don't really care when it's going to get there. You can just sit on it, but you're only going to make like, 10, 20, 30%, whereas if you can time this correctly with options, you're going to make 1,000, 2,000, 3,000%, depending on the move. So what I do for timing is I take these two low points, the swing low in price, and also the very lowest points on the RSI, and I double them. So up here in the left corner, you can see what day it is. This is a daily chart, so that's day 382, and this made a lower low relative to this swing low, which is day 268. So 382 minus 268, um, what is that, 114? So add 114 days to this point here at 382, which would be 496, I believe, or like 500. Now keep in mind this isn't perfect. The timing isn't perfect, and not only that, but this could also just it can come all the way back down to the low. It can chop sideways. It can go up directly. This method doesn't tell me the exact path. It just tells me that it has roughly until day 500, because we're taking the difference between these 2 points and we're adding it to this point forward. Okay. And if this is going to be correct, price should hit like in between 60 and 65 by day 500. So if we're gonna use, hypothetically, say we're gonna buy options for this, we think that it can hit, uh, we'll just be conservative, 60. We're probably gonna want to buy something like at the money or very close to it, maybe like a 55 strike for calls for, and if it's 114 days, what's that, 3 or 4 months, then you're probably going to want to buy it for like 3 months out. Now, this can definitely apply to lower time frames as well, but the problem with that is, the signals get a little bit noisy. The higher time frame you go, it has a little bit better chance of working. So um, I'm just going to build a starter position here because we are a pretty decent ways away from this low that it's showing me. Again, I don't know what the hell is going on over here. This could be a prior area of resistance. I don't know, but so far, the way price is acting, um, where the volume, where how price is behaving relative to the volume, it seems constructive. So I'm going to start a position here. And if it does fall back into this range, I'm just going to keep adding because, I think, this looks constructive. So we'll just start off adding here. Okay, there's a large sell candle here. There's a heavy volume here. Um, we're just gonna let this run and see what happens. If this gets slammed like if a huge supply bar comes in and just starts wiping this out, I'm gonna start thinking that, maybe this run is cooked and maybe this is a distribution. Again, it's hard to say without the information over here. Um, these aren't these setups aren't 100% guaranteed. So I'm just gonna run this and see if I can get something constructive out of this. Because remember, this has until day 500, so the game might not even let me see the outcome. That's a good sign that we're getting some movement higher. Okay, so here we hit the minimum target of 60 already. And it is day 473. So this is the cool thing about this system that I've pretty much created. It's a nuanced, it's kind of like a modified version of the RSI projection thing. But I mean, this is like live proof that, I've been doing this for a long freaking time, and I've been using this system for a while. And when it works really well. You should be able to know fairly quickly when it's not working. But pretty good result out of this so far. So because it's at 60, um, this is a rounded off number. So we're probably going to hit a little bit of selling here and pop higher up to 62, 63. That's my first thought. I think I said in between 60 and 65, so probably 62, 63-ish. Um, but so far you can see the volume down here coming in. Like a bunch, like this looks like a scary amount of cell volume, but the thing is, this also is indicative of buying. Um, it doesn't have to mean that this is like super bearish. This is actually because of the way price was acting. This was actually absorbed by buyers despite the red candle or the red volume. So um, I'm actually gonna run this for a few more just to see if it can pop higher. I'll place a stop. Okay, so now the high 62. All right, so cool, hit it. Now obviously you don't want to give back you don't want to give back all this progress, so we're gonna go ahead and zoom in, and I'm gonna place my stop. Where's the low? 59. I'm gonna place the stop at 59.50 because this is a really nice bullish engulfing candle, but this can also be an exhaustion candle and could get sold into if they want to distribute here. So I'm gonna go ahead and place my stop at what did I say? 59.50. And I'm just gonna run it. If I get stopped out, then I'm just gonna go ahead and move on. If it wants to print higher, cool. If not, then it's fine. Okay. So 10%. It would have been more because I really would have taken my position here when we got the print down here on the higher low, and also notice the MACD crossed the zero line after this print. That's another thing you can program into the algorithm for higher probability. And then when it kind of back tested and built this little consolidation thing, the MACD just kind of found support at the zero line. But look how like day so if you look in over here in the day corner, when I projected it out to 500 days being like the max, but it hit it by day 478, and it hit exactly where I projected it, which is 60, 62 to 63. And notice that after it did hit that measured move, especially in like almost perfect time, is when we started to get this kind of like sell-off distribution. Now this doesn't mean that this is like the end of it or whatever. I don't have enough information to say whether I would get back into it. It looks like it probably wants to go higher, but after it hits a measured move, it will tend to need to go back for more fuel. And when it does go back for more fuel, typically it's going to want to go get it from the prior lowest RSI point. So it could be most likely somewhere in here, but the strongest re-entry to go long again, if it does have more fuel, would be this area here, this RSI level. So this was actually a really good example of the system that I basically developed in terms of timing for time and price projection. So we'll move on to one more, and then I'll cover what the triple Qs are doing just briefly. It's really a matter of selection for the most part. I skip the vast majority of structures, especially if they just don't fit my system, or I feel like they just don't, offer me a high probability setup. Like this here, I'm not taking this just because I don't want to short it, and I also don't want to go long because it's just getting slapped down. It's just not constructive to me, and I don't have enough information. And it's the same thing here. These super like these structures that are just getting slammed to the downside, and it's already down a ton. Just don't even bother with these because you're just gonna get these random pops higher, then these slow chops and random. I don't even bother with them. It would be nice to find a short structure because all I really like post in here are longs. It's just hard to find it because most names are in a higher time frame uptrend. So without enough information, you try to short it. You're like shorting some level of support that you can't see, and um, it just makes it a little bit more difficult. Okay, so um, here we have early hidden bull divergence, but as you can see here, the MACD is still below the zero line, pops up to the zero line, gets rejected again. Price made a lower low and a higher low. This is called a bull divergence, not a hidden divergence. This is just a regular bull divergence where RSI makes a higher low and price makes a lower low. And it reacted off of that. The MACD is currently on a sell signal. This could be okay. Um, let's see if I want to take this or not. Yeah, wow, and it's already gapping down. Yeah, this gapped down a ton. This is why I don't really mess with these types of structures after they're already like you have huge gap downs, and the downswings are like really strong like this, like relative to any of these downswings. You're having some very significant change in structure, and it's going to take a while to build a base. So I'm skipping that. I'll try one more. If it's nothing, then I'll just try and cover the cues real quick. This is already at this prior high, but it is gapping up. So if I get a pull back down to this RSI, maybe I'll take a shot at it, but this is getting absorbed on the way up. It's just tough because I don't like. So if this is the whole base here, we're talking measuring this prior swing high 65, 35. If this wants to be a true breakout, this is going to hit 100. So I'm just going to take a position here. And I get slaughtered. Well, that sucks. And this is why yeah, this is the hard part about trying to play this game when you can't see the rest of the information over here. And then it gaps down when you bet way too much on it. So, well, that's just how it is. So, let's see. With the triple hues here, so all of these large nodes here is dark pool volume. Dark pool volume is basically generated by large institutions. These are like massive order blocks, billions and billions of dollars, and depending on how price is reacting to it, you can tell whether it's buying or selling. It's not going to tell you directly, but you can see like there's large nodes here, and it's just printing down, 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 down. If this was going to be a full measured move, this looks like a diamond pattern. So you're not just taking like the vertical count of here to here. You're probably going to have to multiply this by all these different little swing highs and lows. So like, what's that? We'll just call it 750, 695. Then we got another one here. So I'd say roughly 110 subtracted off of the base here, which would be roughly 585, which would bring it all the way down to this gap. price basically built. It was building up a distribution range, and this all the fuel in here, kind of all of it just adds up to pretty much exactly how much fuel it needs to go fill this gap. And conversely, I think I put this in one of my other videos. If you were to add the highs and lows of this entire range here, it was 638, 5. We'll just call it 558. So that's 80 to the high. We'll call it 640, 720. 720, you got that initial sell off and then it popped higher. So yeah, it looks like this is gonna try and work its way back down to fill this gap around 600 at some point. You can see the MACD crossed below the zero line back on July 14, 15, around the 16th. So it's just going to keep chopping and doing, and distributing until the MACD can work its way back above the zero line, basically. It tends to alternate like patterns. Like you can see here, it tried to kind of go down and just chop to nowhere. I have a feeling it'll try and put in something like this. We're gonna get like a little move back up, and it'll probably reject around, I don't know, 680-ish, something like that, and then we'll have a capitulation event before we move back up, if I had to guess. You can see over here on gamma, this is nothing but negative gamma. Dealers are forced to sell their positions, and they're basically just accelerating the move. If we look on spot, it's nothing but puts. All these red bars here are basically put positions. There's a put wall here at 660, and there's a long tail here. So if I had to guess, this might go for a little back test of this candle, maybe up to 675, 680. And if it does, it's basically just going to form another range, building a measured move, which would add up to, so we're talking like 680. It got down to 660. So that's a 20-point range. So if it does want to range here for a bit, we're talking another 20-point drop down to 640. Until it can basically find buyers, and the move is just accelerating. So until it finds the liquidity that it wants to start moving back up again, it'll just keep dropping. So yeah, looks like this gap is the target. I think I'll just end it there for now.